Hey guys, welcome to Aptera Owners Club. A month ago, Aptera filed a semi-annual report with the Securities and Exchange Commission. And so I wanted to take a look at their SEC report since I'm an investor and I know many of you guys are investors as well, and kind of compare it with the recent SEC annual report that Elio Motors filed, just to kind of contrast what a uh, successful startup looks like compared to a less successful startup. All right, so this covers the semi-annual period that ended June 30th of 2021, and it was filed on September 24th, 2021. All right, so let's get down to the operating results. What it shows is that they had a total operating expense of about $4 million for the 6 month period ending in June 30, 2021, compared to the 6 month period ending in June 30, 2021. It is more than double. They had expenses of $1.6 million in the 6 month period ending June 30th, 2020, and then it's 4 million in June 30th, 2021, an increase of 154%. This was driven because there was a large increase in research and development costs, and they had significant increases in engineering services, research and developmental expenses, and wages. So they hired a bunch of engineers, and as we know, they hired a bunch of executive staff as well for logistics and things like that. So that's kind of to be expected. So the net loss for the 6 month period was so they lost $4 million, which is to be expected because they have zero revenue. They're not selling anything. They're, in a startup phase, you're just burning cash, and that's usually what happens. All right, liquidity and capital resources. As of June 30, 2021, the company has $5 million in total assets, which include almost 5.5 million in total assets, which include almost 5 million in cash. All right, so that's very important. They have a lot of cash on hand. So they have enough cash on hand at the end of June 30th to fund themselves at least for another 6 to 9 months based on their current burn rate. All right, so let's look at Elio Motors. This is their annual report that they filed. It ends the period of July, the fiscal year ending December 31st, 2020, and they filed this in September of 2021 as well. Okay, so there's 8 pages of all the ways that they could fail. They talk about all the various problems that they could run into, and then we get to okay, here we go. Operating results. So as you know, Elio Motors didn't really do anything for the past several years. They've gone silent, and they just came up with a new website. So the first thing that they had in 2 years was they came up with a new website saying that they're going to go electric. But however, operating expenses for 2020 increased 21% over 2019. So how much was it? It says that our net loss for the year ending December 30th, 2021 was $18 million compared to $16.5 million for the previous year. They did not have any engineers. They were not doing any research and development. So this was probably almost all salaries to their executives and interest income from all their debts. Their accumulated debt, they're in debt like $200 million. And then as of December, they had cash on hand of $130,000. So they have 200 million in debt. They have an operating burn of about $18 million per year, and they have cash on hand of 130. So they have cash on hand to fund themselves for what, a week, maybe. And that's compared to a burn rate of 4 million for 6 months. So that's 8 million per year. So it's 8 million per year burn rate. But they are actually paying engineers and developing something rather than just paying interest on a bunch of loans. And they have cash on hand of almost $5 million. All right, so let's look at their financials. All right, so here's their financials. Cash on hand, 5 million. Okay, let's look at Elio's financials. It's way down at the bottom here. Okay, I'm gonna get to it. All right, here we go. This is their balance sheet. So for 2020, cash on hand, $130,000. total assets of 16 million because they're saying they have all this machinery because they supposedly have this factory that they own. But if you look at the particulars, they don't actually own that. They're leasing it, and they just owe them a bunch of money. So this is probably optimistic that they own this thing. If you take this away, their assets are about 5 million. So current assets, they have 5 million in cash and some other stuff. And so 5.4 million in assets. Then liabilities, they have about $5.6 million in liabilities. These are the safe agreements that people bought in the WeFunder round, and then accounts payable to their vendors and things like that. All right. Compare that to Elio Motors. They have liabilities of 105 million here. And then if you count these other non-refundable customer deposit stuff, 140 million. So that's large amount of debt. All right. The other interesting thing that I found in here was, let's see. Okay, so going concerns and management plans under this note one, they say we will rely on advances from our founders and other external financing to operate in the company's early stages. So far, it looks like they haven't taken on any debt. They've been able to fund themselves through stock offerings and basically investors. That's a good place to be because they don't have to pay interest, and they're getting advances from their founders, which makes me think that Steve Fambro and Chris Anthony are actually putting a lot of their own money into the company, which is always a good thing to have founders that believe in their company. Or their advances could be in the form of not taking salary. If you look at, let's see, executive. Okay, executive salary, I think. Yeah, here you go. So during the 6 months ending here, the company paid its executive officers $240,000 and then $25,000 back in 2020. So they really didn't give themselves much money in 2020, but in 2021, they paid themselves $240,000. That's between all of them. That's Anthony, Fambro, Hardwick, the other exec. So I think there's like 5 or 6 of them at this point. So this is spread out amongst 5 or 6 people. That is not a lot of compensation, which makes me think that probably Anthony and Fambro are not taking any compensation at this point. I think they're just paying their non-founder executives because this is really not a lot of money. Compare that to this executive compensation. Okay, maybe it's under salary. No. All right, we're gonna find it. Oh, here we go. So in 2019 and 2020, Paul Elio paid himself $250,000 both years, which they weren't doing anything in these 2 years. They'd gone dark, and they paid their chief financial officer $175,000. So that's the difference. Like this founder is paying himself money as the company is going down. These executives are advancing money to the company and probably not taking compensation, is my guess. It's not clear, but just based on how many executives they have and how much they're paying, which is not very much divided amongst those people, I suspect that the founding executives are not taking any money as salary, if anything, at this point, and actually probably putting up their own money to fund this company. So, anyways, it looks like based on how they're doing, they feel like they have enough money to fund themselves for the next 24 months. I think I remember seeing at the beginning, they said that they had enough cash on hand that they feel comfortable that they would be able to fund themselves for. Yeah, here we go. We believe that the proceeds from the offering, together with our cash and cash equivalent balances, have enough adequate funding to meet our liquidity and capital expenditure requirements for the next 24 months. Now, that's a good sign. So they feel like They got plenty of money to fund themselves for the next 2 years, and they think they have enough capital until they go public and to sustain its current applications. So as long as they are able to start delivering product within the next 24 months, which I think is doable, initially, when they first started this thing, they said that they were going to deliver a vehicle to a customer by the end of 2021. That's obviously not going to happen. And then they said that their plan was to have a production intent vehicle by the end of 2021. I find that pretty unlikely. I mean, it could happen, but I mean, they just got done with their alpha builds and we're very close to November at this point. I doubt that they're going to get to gamma builds by in like 2 months. Who knows? They could surprise me. But anyways, I think it's very likely that they make it to production within 24 months. I think that's highly likely based and their balance sheets look good. They have lots of cash on hand, and they've been able to. And this is just until um, July. I mean June of 2021. Since June of 2021, they've raised a lot more money, and so they're doing quite well in terms of funding themselves, and they haven't had to go to the bond market or take on a lot of debt, which is a good thing because debt will crush you, as you can tell here. They have $200 million in debt, and then that gives them a burn rate of $18 million a year, probably predominantly on interest and rents that they have to pay. So I will link both of these documents in the description below. And if you're interested, you should check it out yourself. There's a lot of interesting things in this SEC filing. They talk about how many shares they've sold and things like that. And so you can dive into that some more. Okay, well, thanks for watching. If you've read this document, please comment what you found in the document, what you find interesting or maybe concerning. Overall, I thought it was quite positive, and I think that the fact that the reason that Aptera failed the first time was that they ran out of cash. They were not able to procure a government loan. Looks like this time they've got plenty of cash to make it to production. They're not depending on any government loans, so they're not putting all their eggs in one basket. And it looks like their stock offerings are going well, and they're not going to have any problems bringing it to production from a cash flow standpoint, which I think is a really good sign.